Good morning, everybody. Today is 3/22/2021. I'm Chris Lawhead with Excel Financial Group, coming to you from snowy Colorado here. And this is the Monday morning rate watch. So let's check out at least my three most common loans that I do, which are VA loans, conventional loans, and investor loans. And let's see where everything is at, and then we'll check the bond market real quick, and you'll have some info. So here we go. Let's start with VA loans. So VA loan, we're going to do a 30-year fix for a purchase. We're going to do a $500,000 purchase, 75% loan to value or 25% down, good credit. I picked a zip code here in Colorado, single family house, and let's call it a primary residence. Let's see where rates are at this morning. This is 10:30 a.m. Mountain Time. Let's see what's up. Okay, so the best pricing lender here we have is 2.625 with an APR of 2.754, and that comes with a $745 credit back. What's that credit back? That's a secret back-end money called the yield spread premium. If it exists in our loans, we credit 100% of it back to our clients, and they can use that for third-party costs that you cannot avoid. What are the third-party costs you can't avoid? Title, taxes, insurance, stuff like that, okay? So let's see what the worst VA. Now notice these aren't all our lenders. We have way more lenders in our pipeline, but not all the lenders actually do VA loans. So this is probably 2 or 3 dozen. So the worst pricing lender at 2.625 is costing $13,000, right? So instead of a credit back, there would be points that you'd have to buy down. We call them buy down points, or the cost. And that'd be $13,000. So that's insane. That's why the broker model is so good. So we would obviously go with, our best pricing lender who can perform, and these guys can perform at 2.625 with a credit back, right? Let's check the others. Let's check a conventional loan. Same everything. Good credit, 25% down, single family house, owner occupied. Now we're going conventional. Probably do most of my loans are probably conventional loans if I check my stats real quick. So it looks like 3% is coming with $109 credit. So par is essentially 3%. There's some 2.99s in there, but those are costing. This one's costing $900. So our best pricing lender that's essentially par is at 3%. And our worst pricing lender that's at 3% is costing $11,801, right? So again, look at all these lenders that we're making compete, okay? So right now, they're just competing on essentially rate. Now, we would also have them compete on appraisal times, turn times, ease of use, can they get it done without driving us insane, all those kind of things. But for these short Monday morning rate watch videos, I'm just going to go with the best pricing lender that we know we can do a deal with, okay? Let's do one more. Let's do investment properties. Got a ton of investor clients. Same thing again, 30-year fixed, 25% down, single family house, good credit, investment properties. So I'm going to guess they're at least a 0.5% percentage point higher, if not maybe a little more than that. Yep, and here we go, 3.625. With a good credit, $1,400 credit, that's a good credit coming back. So 3.625 has a nice healthy credit. Let's see what the worst is. 3.625 with $11,895 cost. Again, the power of the broker, which we're essentially walking into all these lenders all at once and making them compete. All right, so there's your rate watch reel there. So 3.625, APR 3.647. Credit back of $1,400 on a single family investment property. Now let's take a peek at the bond market. Okay, so the bond yield's going down a hint, just a hint. And so maybe these rates get a little better if that continues to drop today. Because remember, mortgage rates are generally directly proportional to the yield of the 10-year Treasury bond. Yes, there's many more factors involved, but this is our best kind of indicator. I'm not the rate guru. I can predict rates in the short term simply by looking at one of these graphs. And when I say short term, if I see this thing going down, like really tanking down, then I know rates are going to get a little better. So I might hold off on locking a rate. At the same time, if I see them shooting up, I won't hesitate. I will lock the rate before they get up, or I'll try to lock a rate if we're doing a deal as fast as we can so rates don't go up. So I always like to take a look at the bond market. Again, here's why rates are going up. Look at, this just goes up and up and up, these yields. So that's why we've seen interest rates go up in the last, say, month. And anyway, there you have it, everybody. For compliance purposes, I'll show you my NMLS number, which is 1277582. Here's my cell. Here's my office number. Here's my email if you want to get in touch with me. Hope you're all well. Happy Monday. Bye-bye.